Broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to CPA Academy. My name is Christopher, and I am so happy to welcome you into today's webinar on modernizing financial operations, a spotlight on accounts payable, sponsored by Tipalti. Our presenter today is Chris Doxey. And before we get started, I want to go through some quick housekeeping items and do some technical checks to make sure everything is working for you. So first, if you don't mind, find your GoToWebinar control panel. This is located on the right-hand side of your screen. Find that drop-down labeled questions and pop it open. Now, this one pane will have several uses for us today, but right now, if you could send me a quick note, let me know that you can hear the sound of my voice, you can see the slides that Chris has up on the screen, and as always, just for me, let us know where you're calling in from today. And I'm starting to see some of those responses pour in right now. Thank you so much. We are so excited to have each and every one of you taking time out of what I am sure is a busy and packed schedule to learn something new and wonderful with us here at cpaacademy.org. So thank you. We appreciate each and every one of you. Now, if any of you are having any technical trouble, let me know in this same panel, and I will do my absolute best to get around to each and every one of you as quickly as I can. Just keep in mind, there's quite a few of you and only one of me. And if you have any questions for Chris throughout today's presentation, this will be where you can put those questions. We have a lot to go through. We'll have time for questions at the very end, but even if we're not able to get to all of your questions, we will provide those in a report that Chris can respond to later today. And now that we know everything is working, let's talk about our credit. This is a 1-hour webinar and qualifies for 1 CPE credit. The way you earn that credit, as always, is straightforward. Just stay logged in for 50 minutes of our allotted time and answer the poll questions. Today, we'll have a total of 4 polls throughout our webinar. And in order to earn a full credit, you'll need to answer at least 3 of those polls. So for any reason you're not able to answer one, don't worry, we have the next one already baked in for you. And if you're unable to see the polls, minimize your screen and make sure it's not hiding behind another browser you might have open. Your CPE will be issued by the end of the day today. It'll be available in your CPA Academy account, along with an archived recording of this presentation that you can watch at your leisure as well. Last but not least, we also recommend you download today's handouts. These are in the handout section at the bottom of your control panel. And once you have those, you can follow along with the presentation. With that, we are all set. So let's go ahead and turn everything over to our presenter. Chris, the floor is all yours.
All right, thank you very much. I'm glad to be here with everybody and working with CPA Academy as well as Tipalti again. And what we're going to do is talk about modernizing finance and focus on accounts payable. And we'll get into the learning objectives just to sort of give you an idea of what we're going to be talking about. And we're going to really discuss why automation isn't enough for a healthy and cost-effective future and what it means for your organization. We'll talk about using a strategy of modernization to your advantage and your accounts payable process. And we'll provide a look at accounts payable automation best practices. And as far as our sponsor, I've been working with Tipalti for a couple of years now, and Tipalti is really the only company and solution provider that handles both AP and mass pay for mid-market companies. And what's really impressive about Tipalti is they're focusing on the entire cycle, which includes the funding of global entities, onboarding the global supply chain, streamlining invoice workflows, and reconciling data. So it's really an end-to-end solution, right from supplier onboarding to the reconciliation process. And what Tipalti really does is it enables high-growth companies to scale quickly by making payable strategic, which is right in line with our theme today. And what's really cool is Tipalti customers typically reduce operational workflow by 80%. And what I love to see is we're also accelerating the financial close by 25%. And we're looking at strengthening financial controls and spend visibility. So that's a little bit about Tipalti for you, and many of those key themes we'll be talking about throughout today's presentation. And so we'll start with some statistics. And I looked at Blackline, who does a lot of support for the financial close and automating the financial close. But they're talking about the future of automation. I've also got some other statistics in here for you to use as a reference. But as far as what the prediction is for automation, one leading analyst firm predicts that by 2024, which isn't really that long in the future, 60% of mid-sized and large organizations will employ cloud-based applications to automate and improve the financial close process. So what we're talking about is really reallocating accounting resources and really taking accounts payable away from that back office sort of perception and moving them into the forefront. And we'll see why and how that can happen. And unfortunately, finance doesn't have the most illustrious record of successful automation projects. There's been a lot of stops and starts over the years. And what we're seeing is if we look across the entire finance function, the automation gap is still a pretty big gap. And some of the survey respondents that came from this Black Line survey said that they could do much more to automate finance. And I'm a process flow person, and you'll see some of those examples in today's material. But you're really going to look at the end to end and see where it makes sense to automate, and particularly what is going to address your biggest pain points. All right, so less than 30% of companies have actually redesigned their processes across all functional areas and business units affected by processes. And what the point here is, we talk about best practices and doing things properly and smartly before we even undertake automation. Because automation is a wonderful thing, but it's not the end all be all. And what we're going to start out with is a polling question here. And the poll question is, what specific processes impact your accounts payable team the most? And the first question is, the first answer is validating and setting up new suppliers. This is your onboarding, the matching process, coding invoices to the GL, and reconciling clearing accounts. I was going to put in all of the above, but I thought it would be really kind of interesting to see your answers for each one. And those results are coming in here. Thank you very much for participating. We've got a few more votes that need to come in to give us some good results. When I was in AP, I would say that, again, all the above, but the biggest one and the biggest challenge was reconciling clearing accounts. Again, for manufacturing companies, this is a very big deal. And if you don't think about clearing accounts as a key process, you can certainly find out the hard way. Okay, we're about 87%. We'll just wait for a few more. Okay, good. So let's see, we've got 17% validating and setting up new suppliers, 29% the matching process, 33% coding invoices to the GL, and 21% reconciling clearing accounts. And I'll just throw something out there for you. What if you had an automated matching process? And what if you had your invoices automated and they were coded as they were coming in? I mean, how cool would that be? And that's, again, some of the material we'll talk about today. All right, so thank you very much for participating and great answers. All right, so we'll talk about what is a strategy for modernization. And, it's funny when we talk about modernizing, we're thinking about, okay, should we, redo our kitchen or something in our house? And, it's something to think about, what makes sense? What are your biggest pain points? If you're looking at a modernization of an area in your house. And basically that's what we're talking about is what area, particularly in finance or accounts payable, do you want to fix? Do you want to, change? So there's 4 digital technologies that are going to reshape the finance function. And this is coming from my friends at McKinsey, and they really put out a lot of great research. And, we look at automation and robotics to improve processes. And then we talk about data visualization. And this gives, of course, end users real-time financial information. And, again, in today's day and age, this is still a big deal. We really don't trust the data. How do we get it in a real-time format and totally reconciled? And, we talk about one source of the truth, and how do you get to that point? And then advanced analytics for finance, and that's to accelerate decision support. And then we look at also advanced analytics, not only for finance, but for the business. And this is really kind of marrying up finance with the business and making sure they're certainly seeing the same types of analytics. And of course, at the business level, we're looking at pricing and SKU lineups and tracking resource and certainly predictability. And all that can happen with automation and the data visualization and the correct data, of course. So who are the decision makers? And if we're looking at CFOs and controllers, these are the people that really drive the finance organization and can certainly help influence the automation or modernization direction. And they're stewards. They have a stewardship to the company to prevent cash leakage. And if you look at, well, if we have internal controls, they're usually in the hands of the controller or the CFO, but they really want to make sure that across a company that cash leakage is not an issue. They're also operators where we're looking at aligning capabilities and cost. And as we automate, as we modernize, jobs change, responsibilities change, and we still have to make sure that we're fulfilling the finance organization responsibilities and doing a lot of enhancements. They also have a strategic direction where they're aligning business and financial strategy, providing that leadership, and as a catalyst, going to change some behaviors to achieve objectives. And that's to, of course, set goals and objectives and plans to make sure those behaviors are lining up. So what's happening to the role of the CFO? And this ties back to some of the information we saw in the data from McKinsey, data-driven decision making, information-based competitive advantage, enhancing the speed to insight. I really like that phrase because it's not just the speed to get to the data, but it's the speed to insight. And what makes this all happen? Process automation, extracting value from the information, and making decisions a lot faster, and of course getting to that insight a lot quicker. All right, so what are the pain points? And we'll be drilling down to the accounts payable process. But at a top level, the CFO and the controller are concerned about complexity and cost. There's disconnected systems, and believe it or not, I still see this. And today's realm of cloud computing, there's still a lot of disconnects, and there's data reconciliation challenges, and that's impacting, of course, the accuracy of the financial close. Too many systems. And if any company does an inventory of the systems that they're using, it's very interesting because you might be surprised and find that there's sometimes some offline systems still doing things on spreadsheets, and that's of course creating risks because you're doing a lot of reconciliation back and forth to the system of record. So cost and complexity, too many systems and way too many spreadsheets. We got a couple more pain points for you. Not enough time. And of course, with accounts payable and accruals, we're adding to the overly complex closing procedures. And data, again, being a big driver here, untrustworthy data. And, I was actually, besides accounts payable, I had some responsibilities on the financial close. And data had to be correct and timely. And if you're in the middle of a close, preparing worksheets and work papers and getting ready to prepare the financials, and you find out that someone sent you the wrong data, it really caused a lot of problems. And then validation that controls are working. Now, if we're in a very manual, we'll call it an old-fashioned type of process, we're always worried that controls are working. We're always worried about the risk. Did someone key in the data correctly? Did we key in the correct invoice? Is there a duplicate payment? Is there a possibility of fraud? So that ongoing validation and reconciliation is certainly a big pain point for the CFO, controller, and other finance executives. All right, so if we talk about modernization, we're really talking about transforming finance. And again, I've been involved in so many different, I guess, types of transformation. We used to call them business process optimization and call them different types of transformation. We called optimizing financial architecture. And, again, we're not there yet. And a lot of the terminology has changed, but a lot of the goals are the same. And, we still focus on getting to that optimization of our business process and making sure that we're proactive and we don't have that reactive approach to technology adoption. And what is a key or three key components of a successful finance transformation? Of course, are people, process, and technology. Sometimes we forget about the people. It's like, oh, wait, we got to go back and train someone. We got to make sure we communicate. And the process is usually included in the technology. But lining up all three is a challenge and still remains a challenge in any sort of transformation or modernization effort. And here are the key components for a successful finance transformation. And if we drill down a little bit on each of the three components, and we mentioned this a little bit, we're looking at new core competencies and expectations for finance and accounting and that culture of modernization. And that's a lot of change management and, of course, communication. And as far as the process, we're prioritizing a company-wide digital transaction processing type of environment. And we need to focus on timely and accurate data, the need for data analytics, and that's all going to get to that timely and accurate financial close and one source of the truth. With technology, looking at the biggest pain points, defining a business case, and matching your technology with your strategy, and have an understanding from a technology perspective that one solution doesn't fit all. You might have different pain points, and you might have some types of process improvements that can be done with some best practice solutions. And if we look at the AP process, and the reason we focus on financial close is really divided into three main categories. And where AP comes in, that's where we're accumulating transactions and driving the reconciliation process and an accurate subledger close. The second part of the corporate close process is the corporate close and consolidation. And then the last bit is the analytics and reporting, or often called the final mile. So you can see, if you line everything up as we're implementing a transformation, we still have to look at the impact on the close. I've been involved in a lot of mergers and acquisitions. And one of the biggest things was, okay, we still got to close the books. It doesn't matter that we've got, 16 different general ledger systems, but we still have to make sure we're closing and meeting the predictability goals and the accuracy goals. And doesn't matter how we get there, but we've got to get there in a timely manner. So if you're looking at defining a strategy, we start with governance. And it could be someone, at the executive level where there's an advisory board or team. But governance is really going to help to make sure that we're enhancing the performance of our people, our processes, and our technology. Performance metrics. And that's not just, okay, what do we want to get to, but taking a look at what are some of the key costs and cycle times in today's environment. And that could be exceptions, transaction costs, percentages of non-matched invoices, and competencies. And one of the things to think about, and I mentioned AP as a back office, type of process, and it's really evolving into a team of very strong financial analysis types of folks. And it's being proactive and making sure that people are trained, not just to process a manual invoice, but to actually analyze the data. And then our roles change as we get that data and we're less focused on transactions. We can offer more as we have that enrichment with new data in a connected process. As we move from operationals to strategic, We're looking at seamless access to information, and that means not, worried about reconciliations and did you give the CFO the correct data, but you always have to make sure you've got the right information. Distributive empowerment and the need to know. And, as we're talking about modernizing finance, we should have more timely and accurate information available to our stakeholders, our suppliers, and that includes the status of requests, approvals, and payments. Now, if you're approving your invoices manually, the question is, all right, where's the invoice? Is it sitting on someone's desk? And if you're not using workflow or any other sort of automation tools and techniques that we'll be talking about, the challenge is, well, gee, when I get to the end of the month, are my accruals correct? Did I miss anything? So we start with analyzing the organizational impact, and that's taking a look at key activities and responsibilities. And that's understanding the dependencies and interdependencies that are included in your process. Look at your process gaps and make sure you're aligning with business goals and who cares, who are your stakeholders. And they need to be your sponsors, and make sure that they have an opportunity to contribute to the transformation process. Define your process owners, and they're the ones that, particularly in accounts payable, that are going to make this whole effort of modernizing finance, focusing on accounts payable, the success. If we look at a project plan for implementation, it sounds, kind of daunting, but it doesn't mean you need to revamp your entire process. And, again, in the early days of implementing ERPs like SAP and Oracle, the challenges were, okay, do we do a big bang implementation, which was, total chaos? Or do we look at implementing by business process or by subsidiary? And as long as there's a plan with governance, it totally makes sense. And ensure you analyze data to prepare for the future. Understand where you are today and what you need to get to the point where you have very good, strong analytics. Align with corporate priorities. And what we're talking about here is make AP and procurement, because, as we know, AP and procurement go hand in hand, a fundamental part of the company's innovative practices. Find or train your finance team to support the new digital technologies. And, as we stated, technology alone isn't going to solve all your problems if your team doesn't understand how to use it. And, one of the things that I look at when I support a technology implementation is make sure you've got communication and training and user acceptance testing on your radar screen. Because if you don't, you're always going to have that risk of, well, people aren't trained, they haven't tested it, they don't see the system until, they come in the morning and realize that the AP process has totally changed for them. And get leadership on board. Finance isn't a lone wolf operation. I worked for managers over the years that used to think it was, but you're not in it in a silo. Need to make sure you've got all your operational and organizational support that you need. Okay, and here's a roadmap to think about. But if we look at the people, process, technologies, build a business case and establish a project plan for implementation. And as mentioned, there's a holistic approach to transformation. Make sure the technology is scalable and becomes a fundamental technology. And then for a project plan approach, we're looking at starting small, understanding the data, align with corporate priorities, develop your talent, and get leadership support. And we talked about this a little bit, but just to sort of go into a little bit more detail, the factors for a successful implementation, a rapid implementation, and I don't mean, get something in by Monday morning, but make sure you've got a project plan with something that makes sense. And The reason I say rapid here is I've been involved in some projects that never seem to finish. They keep going on and on and on. And what we want to do is, while we've got everyone's attention, is let's get technology and the change implemented as quickly as we can. Make sure you've got the resources, make sure they're working together, which can also be a bit of a challenge. Um, and again, we're all working virtually for the most part, but that can still be accomplished in a virtual environment. Make sure you've got advocates or sponsors and complete your testing and get to the right mindset. And, I've done a lot of webinars over the years, and I did one quite a while back on procurement cards and paying suppliers with procurement cards or using the procurement card for small dollar purchases. And, we talked about using the chat function, and it was actually kind of hilarious. I kept getting the same, chat from, or the same type of chat from an individual she was talking about, or he was talking about, well, gee, if we implement a P card, we're going to lose our jobs. And, it was sort of really missing the point. We're looking at enhancing and we're looking at modernizing. And that's just an example of a payment solution. And what we're going to do now is look at our second polling question. What process in AP is impacting the financial close the most? And the answers, or the selections, are reporting and analytics, the accrual process, GL reconciliation, and the last choice for you to consider is resolving clearing account variances. That was interesting. Years ago, when we were working on an SAP implementation, we were told that the GRIR, goods receipt, invoice receipt account was self-reconciling. Well, never believe that if someone tells you that. Anyways, long story short, we had a major variance to consider on a worldwide basis. And the only way we could really get to a point of resolving it was to implement a new type of reconciliation process. All right, so the winner is the accrual process at 33%, 25% GL reconciliation, 23% reporting and analytics, and 18% resolving clearing account variances. All right, thank you very much for answering that question. And we've got 2 more to go. All right, so now we're going to get into AP automation. We've set the stage really at a corporate level. And if you're really on your toes here, we're going to talk about another polling question. And the polling question is, what AP processes would you like to automate? And the suggestions are supplier validation and onboarding, invoice approvals and processing, the matching process, and supplier questions. And we'll tell you how you can actually automate some of these things in the next couple of slides. Okay, we're about 62%, so we'll get a couple more responses in here. Okay, so here we're looking at one of the areas we'd like to automate is invoice approval and processing at 48%. Next is the matching process at 29%, 13% supplier validation and onboarding, and 9% supplier questions. So that must mean you must not be getting a lot of supplier questions, which is probably a good thing. Alrighty, moving on here. All right, here's one of the process flows I mentioned. And I talked about how accounts payable needs to play nice with procurement. Sometimes that doesn't always happen. But if we think about an end-to-end process, we have procurement that's responsible for sourcing, supplier selection and management, contract management, purchasing and ordering, and then we also have receiving. Particularly in a manufacturing environment, we want to make sure that those goods and services are received, the goods particularly in manufacturing or production, and receipts are processed. Now in accounts payable, we have our supplier master process, invoice processing, P card in some cases, T&E is usually under the responsibility of AP, the payment process, accounting processes, and if you think about it, accounts payable has customers, and those include suppliers. Procurement is an actual customer of accounts payable. And in some cases, if accounts payable is a shared service center, there are customers of that shared service center that need to be considered. And last but not least, we look at reporting, analytics, and metrics. And having a good handle on what's happening within particularly accounts payable is going to help you as you automate, because if you know what your cost per invoice is, what your cycle time is, what your concerns are, you can actually see those improve as you're implementing some of the solutions we'll talk about. This is just a bigger view for you of the accounts payable process. And we have a interesting chart here for you. And as we kind of click through it here, this is what a manual AP process looks like. And if you think about it, there's a lot of arrows. There's a lot of people running around, and some of the invoices are coming in a lot of cases, postal mail. Some is PDF. And I once talked to somebody about invoice automation, and I said, "Well, gee, we're pretty much automated. We get PDF invoices and into our accounts payable department." And the question is, well, you still got to do manual typing, and the information is typed into an accounting system, coded, and we're looking at in some cases scanning, investigation as a result of that, manual validation, sometimes manual checklists for completeness and accuracy. Invoices are validated and we determine whether it matches or not. Sometimes we've got to do this in-person approval. And if somebody is out of the office and they haven't designated a signer for them, it just adds to the complexity. In a lot of cases, invoices are mailed to one or more approvers. And then we look at either a manual to a three-way match. Now, our systems do a lot of that today, but sometimes we have exceptions. And there's an awful lot of manual verification where AP spends a lot of time searching through invoices or through emails, paper files, and making phone calls. So after you go through all that, your match is confirmed and you can issue a payment. And then, what happens is we can get to a point where we don't really have a good, strong audit trail. And what happens in a automated process, we'll be getting invoices in XML in a lot of cases, or even a lot of companies are still using EDI. You've got a pretty good audit trail that you can actually go back and track and make sure that invoices came in for what was received, and you can match that back to the payment. Okay, if we look at the invoice processing universe, and this kind of ties back to it's called kind of a treasure map. We have paper invoice receipt, document and data capture, electronic invoicing, content management, matching and workflow, and of course, reporting and analytics. So these are some of the types of solutions that we will be talking about here. But basically, getting your hand around your entire AP process and where is your biggest pain point? Where do you want to focus? And I once worked with a client and they were so thrilled that they had document and data capture and a scanning process was an entire room, and copy machines and files. And the point was, okay, once you scan the documents in, you really need to have a record retention process, and I have a whole file room dedicated to all these different invoices that you've scanned in. So again, perception is a driver with the 5 myths of AP automation. The implementation, if we're looking at automating and modernizing an integration process, is way too lengthy and cumbersome. I just can't deal with it. The second myth is AP automation solutions are expensive and they don't fit into our business model. And number 3, no one is going to use our solution. The other myth is that fraud is going to be 100% alleviated. Well, obviously fraud will be reduced, but it was really very difficult to get to a point where you totally alleviate fraud. You'll find it quicker and you'll be able to address it, but fraudsters, unfortunately, are always going to find a way to break into a system. And one of the things we talked about to show that accounts payable in particular can be used as a talent pool for analytics, because they know the suppliers, they know the spend. So number 5, the myth of I'll lose my job is just that. It's a total myth that these are very talented people that know, again, the suppliers, they know the spend, and they can be used for analytics and putting together some of the strategic goals that we've talked about. All right, so what are the types of automation? I have 10, there are many more than this, but if we look at a supplier portal as number 1, these are really not in any order, just kind of a list for you. But a supplier portal can be a mechanism for a supplier to log in and check the status of the invoice without calling accounts payable, wondering where it is. There's also another type of use for the supplier portal, and this is really a wonderful improvement in supplier onboarding. The portal can be used for a supplier to upload their W-9 or W-8 and any other bit of supporting documentation, such as an insurance certificate, payment information. And a supplier portal really does 2 things: helps with onboarding and helps the supplier build that connectivity with the buyer's organization to determine what the status is of invoices. You can identify disputes a lot quicker. So they've really evolved over the years and very much becoming a foundational technology in today's AP environment. E-procurement. And there are many different types of e-procurement, and one of the ones that really adds a lot of value is looking at things like purchase order flip, where a PO can become an invoice. You don't have to worry about those miscodes for GL and making sure that information is all transported correctly. E-invoicing is certainly a big focus. It's pretty much the norm on a global basis, and the U.S. is in a place where certainly catching up, and with all the wonderful automation providers out there, it's becoming a very good option. Certainly getting rid of those manual invoices and losing that treasure map that we looked at a few slides ago. PO to invoice conversion is another type of AP automation. Now, there could be a maturity level where companies may not be ready to jump into the pool for total AP automation, so they might want to take a step where they may use a third party or a solution provider for document management, scan, and data capture. And the point is, if you're using a partner to help you with that, is to move away from scanning invoices yourself and look at again, the data and focus on data accuracy. Automated matching, and a lot of again, ERP and most ERP systems do this today, but looking at tying that with invoice automation brings you a step further. Automated workflow approvals, and I had some experience with this in my early days of my career, we're looking at tying the delegation of authority policy to workflow. And that was, building code around and tables around what the policy said. And that was to ensure that we didn't have to do any manual checks or balances. And what we decided to do was link workflow approvals to job levels within the employee master file. So teamed with human resources to make sure that we could use that data for a workflow. Anyways, what the main purpose of automated workflows is to get people away from the signature or handwriting expert where you're matching handwriting from one approver to the other, but really looking at automating that process from end to end. Of course, e-payment, getting away from manual checks, and then system access verification tools. One thing with segregation of duties is that it's supported by system access. So you don't want somebody setting up a vendor, paying a vendor, and then covering their tracks with a void or a journal entry. And there are many tools out there that can help you with that. And last but not least, making sure your AP process is working with self-audits to go in and look for duplicate payments yourself and actually figure out if you've got some fraudulent activity, such as those one-time vendors, those low-dollar payments. And so there's a lot of analytics that you can do with those self-audit tools. All right, so if we look at what are the benefits, we have improved cost controls and compliance. And then we can look at more time for the analytics. We can focus on fraud and compliance. And we can get into agile payment prioritization. And that could be paying early for discounts or pay on time. And that improves supplier relationship management within AP as well as procurement and builds technology expertise. All right, so what is the automation journey? If we kind of break up those those 10 types of automation solutions, we can see the ones that apply to procurement, to receiving, and to accounts payable. And our targets, of course, are compliance control, process efficiency, and cost savings. All right, so cutting costs. And this is actually coming from Strategic Finance magazine. And what is really interesting, we talked about reconciliation being one of the pain points, but there's 10 ways to cut the real cost of accounting. So this cuts across AP and finance, but looking at the approval workflow engine, that's really one of the key things that is going to help finance. And then looking at shifting to auditor self-service, which is certainly a great way and a great addition if you've got those self-audit tools as well. And again, we're always thinking about the impacts on people, process, technology as we start considering. All right, so what are the obstacles? And this data comes from McKinsey again. And what we're saying here is that to move forward, there are 6 obstacles to digitizing or transforming finance. And one obstacle is the overall digital vision is not clearly defined. It's either siloed or not, there's not a statement, and people all have different perceptions of it. So getting to that commonality and getting that vision defined. The second one is digital initiatives are not linked to any overarching business strategy. And what we want to think about is, well, gee, we don't want to automate just for the sake of automating. It has to be tied to an overall strategy. Another obstacle is a lack of clear, strong mandate to digitize processes across organizations. And there's another term that's out there. It's called business process automation. And that's sort of like, well, gee, if we automate accounts payable, maybe we need to look at automating procurement as well, and look at end-to-end processes to develop that strategy. Another obstacle is backlash within the finance function over changes resulting from the digitization initiative. And that could be concerns about roles, incentives, change management is really a big part here. Okay, number 5 is the lack of understanding between digital finance teams and business units. And this is, understanding where finance connects, where accounts payable connects to, and where the entire finance team connects, and making sure that there's a common strategy and make sure that those strategies are integrated. The last one is there's a gap between current capabilities and those required in the digital finance function. And, again, we say that, we don't have the talent, and, part of it is building that talent, making sure that people are getting the training they need to become gurus with data analytics. And if you move from that processing role, it's not just, you're not pushing paper, you're not keying in invoices, you're actually implementing analytics, and you can develop your own set of metrics and KPIs and spend analytics. And, again, it's a wonderful thing. But those are, again, 6 key obstacles to consider. If you're in the middle of a transformation, this is a good thing to look at to determine where you are and look at building those capability programs and finance, and not only investing in top talent, but seeing where you've got opportunities within your company to move somebody up in the ranks. All right, so with that, we are open for questions.
All right, and we have a question here. Someone's just wanting clarification what T&E stands for.
Okay, that would be travel and expenses. So if you go on a business trip and which we haven't done in so long, but if you go on a business trip, you would expense your your rental car, airline, hotel, any sort of meals to your company. So that is travel and expense. It used to be called travel and entertainment, but travel and expense is the common definition.
And our next question here is, if we scan in invoices to our GL software, should we keep the hard copy? Right now, we do this just in case something is missed.
If you use some sort of a file management type of thing, again, you want to try to get rid of paper. But if you're scanning them to something like, some sort of file management or SourceNet or something like that, as long as auditors can get to it, you should be fine.
Okay, and our next question here. They're asking, how do we tackle sales use tax in transactions between the US, Canada, and Mexico, i.e. Canada does not allow ACH, only wires?
There are many options for sales and use tax software. I believe that look across functionality outside the US. And it's certainly worth looking into automating your sales and use tax process by looking at some of those solutions. I know Vertex is one of the biggest ones that's a good solution to look into.
All right. Our next question is, let's see here. All right. How do I establish my priorities when establishing an AP modernization strategy?
How do you establish your priorities? Yeah, I would understand where your pain points are within your AP process. If it's supplier questions, if it's supplier onboarding, if it's invoice accuracy, if you've had a lot of duplicate payments. Again, there are solutions that that tackle all of those issues. If you're worried about data accuracy, right to the GL. I mean, it's really understanding what your process looks like today and where you've got some process gaps that can be automated.
All right, our next question is, why is it important to fully understand my AP process before I undertake a modernization initiative?
Yeah, understanding your current process is really a good starting point, and that's almost a traditional process analysis step, is knowing where you are, and that helps you decide where you want to be. And if you've got control issues, if you've got data issues, if you've got resource issues, it's really sitting down and doing an end-to-end process map similar to the ones that we looked at during today's presentation, and identifying those gaps and figuring out an action plan that will help you move forward and prioritize the next steps.
And here's an interesting question. We have a lot of invoices for services. Do you have any suggestions since we can't do a three-way match because there's no packing slip or receiving document?
That's a good question. Part of the challenge with services, whether it's professional services or customer service type of things, you can actually try to work with procurement to see if you can have a look at the statement of work. And if it's a professional services type of contract, typically what a professional services organization will do is bill towards against a deliverable or a milestone. And of course, accounts payable doesn't know that unless you go and take a look at the contract or statement of work to be able to see those details. Because again, a lot of service types of initiatives or projects are very clearly based on that statement of work and deliverables as well as milestone payments.
And our next question is, what if my AP department has been integrated into a shared services structure? Should I take a look at my entire shared services department?
I would start, with your AP process, and think about the modernization from a process perspective. Start with your process and see if there are any opportunities to automate any of the other entities or processes within shared services. So if, as an example, if shared services has a supplier master set up as a separate process flow, well, that's really part of the AP, end-to-end, continuum. But really understanding, what other, areas are that touch AP. So customer service could be one where there could be another, separate department that's focused on supplier questions. That's a good opportunity for Supplier Portal. Reconciliation, is there another accounting department that does account reconciliation? Well, they could be brought into the automation process as well. But understanding, end-to-end as well as your dependencies and interdependencies will really help you establish the next direction in a shared service organization.
And our next question here is, this particular person has their pain point is POs being changed. What can they do, and what software might be able to help them?
POs being changed. That's an interesting one. Well, a lot of this ties back to not only process flows but best practices. And usually there should be a business rule or policy around what the requirements are or what the definitions should be for changing a PO. There's such things like tolerances and who does what, but a lot of it's, again, the policy, the roles and responsibilities, and it could be a percentage that's acceptable to change. But if somebody in procurement is just arbitrarily changing POs, well, that's kind of a red flag for fraud. But then having that, we talk about segregation of duties, but if accounts payable is just arbitrarily changing purchase orders, that's not a good thing to do either. I mean, that's also a red flag for fraud. So again, there's a lot of software that helps with e-procurement as well as e-invoicing. And, again, e-invoicing is certainly a solution that's going to help you prevent any fraud or any of the challenges we talked about. But basically, it's understanding whether you want to look at a e-procurement or a e-invoicing or something like a PO flip. There's also solutions that provide direct input or integration into your ERP or your GL. So yeah, I mean, it's not a simple question, but yeah, there's a lot of good answers that you can look at and just do a little bit of research.
All right, and we have a question here about the automation process. Is the automation process adding to your accounting software, or is it actually changing it? They use QuickBooks Enterprise.
Yeah, it's adding to it. It's enhancing it. And again, many of the software providers out there, like Topology, interface with many different systems, and so you're not changing, your system of record, which in your case would be QuickBooks. You're just adding another type of functionality to your process, which would be an interface directly into QuickBooks.
All right, our next question is, why do AP modernization / automation projects fail, and what is the biggest success factor?
Yeah, a lot of the automation and modernization projects fail because there's not a sponsor and there's not a project plan, which would be number two, and no one, is paying attention. Communication breaks down, and I think one of the most successful projects I've ever helped lead was an automation effort in which we just touch base for a couple minutes every day, not during the whole project, but during implementation. And you bring problems or successes to the forefront immediately, and don't, wait until something becomes a problem, particularly if you've had a quick win as well. You want to make sure that that's communicated. But having a project plan, having a sponsor, having a project team, and having that communication is critical. Because remember our three components: people, process, and technology. Integrating those three into your effort is really going to go a long way, where you're thinking about, okay, now that I'm done with the project, I want to make sure that people are trained and that we do a lessons learned or post-mortem review, some people say, to make sure we pay attention to things we could have done better and things maybe we can improve in our next project.
And before we get to our next question, I'm going to go ahead and launch our fourth poll here. This is our fourth and final poll for the day. Just to make sure everyone gets credit in case they missed the earlier poll, what is your firm or company size? And while we leave that up, feel free to submit any additional questions that you might have in that questions panel. We have about 2 minutes remaining in our time today. Again, this is our fourth and final poll. We have about time for 1 or 2 more questions. We have a question here, Chris. Someone's asking, what should their first step be?
The first step be for modernization?
I believe that's what that is. If you've submitted that question, if you could give us a little bit of context and just provide that in the questions panel, just drop that in for us. I believe that's what they're asking.
Yeah, that makes sense. Well, first of all, it's, not to be redundant, but have a look at your pain points, understand, where you are, where you want to be, and that should be defined in your business case. And we didn't talk about a business case very much in today's webinar, but your business case should really have a good understanding of what you need to do to move forward. And I once, worked for a CFO, and the question was, if I ever went in with a request for new software or a new project, okay, why do we need it and how much does it cost? So that's something to think about. Understand your process and think about being able to answer that question. What do we need it and how much does it cost?
All right, and with that, we are at the end of our time. Chris, did you have any final thoughts or closing words?
No, thanks for everybody, and thanks for your help with that last polling question. I think we must have lost it in the shuffle somewhere, but thanks again for all your help, and thanks for everybody for your participation today, and hope to see you at another webinar.
All right, with that, we're getting ready to wrap up today's webinar. We here at CPA Academy will process your credit later today. It'll be available in your CPA Academy accounts within 24 hours, along with a chance for a full webinar evaluation. And while you're there, take a look at the other webinars and resources we're able to offer. I just want to say a special thanks again to our sponsors, to Policy, and our wonderful presenter, Chris. This was a fantastic presentation. I know our members were very engaged, had a lot of great questions for you, so we are so appreciative of your time and your insights. And as always, a warm thank you to all of you in the audience for joining us today as well. We hope to see you all on future webinars. Have a great rest of your day. Thanks again.